if the tax implications are stopping you from trying to buy your first buy-to-let property or build a property portfolio, listen to these 3 little tips I've got in this video today. It might just change your mind. Craig Parker here, Parker's Property Sourcing, just coming at you with another video today. And today's video is just going to be a quick, short fire video on ways where you can be a little bit more tax efficient when buying property. As we know, the rules are always changing for landlords and property investors, and we're getting taxed more, and we're getting taxed on this, and we're going to work a full-time job and get taxed on that. Tax everywhere we look, we're just paying tax. So I've got myself an accountant. As I say in the past, I always talk about building your power team. I'm not an accountant myself. This video isn't financial advice. This is just me relaying information that has been given to me from my accountant, who I pay for on a yearly basis to help me become more tax efficient, i.e. pay less or no tax. So here are a few ways in property where we can pay less tax or pay no tax. So I hope you enjoy the video. Number 1 is, as a property investor, if you're buying a second home or a third or not an additional home, whether it's in a company or whether it's in your personal name, you've got to pay something called stamp duty tax. The only way that you can get around not paying stamp duty tax is by buying a property that's inhabitable. So what do I mean by inhabitable? Can't be lived in. And a lot of the properties that, we might get offered or might be on Rightmove, that's not really the case. But there are in some cases where if you're buying a property and the boiler is no longer in there, or the boiler's not working, it needs a brand new boiler, that property is inhabitable. Or if it's got, major damp issues and it needs a massive refurbish before you move in, that also is inhabitable. What I'll do is I'll put a list in just after this little bit here of all the reasons why a property would be inhabitable and what will help you or enable you to pay no tax on the stamp duty when buying. Point number 2 is buying in a limited company. So a lot of us, before all the changes happened, we was buying in our personal names. Buying in your personal name, I'll just break it down, the two difference to buying in a personal name and buying in a company. Buying a personal name, if I'm receiving £1,000 a month rent, my outgoings on that is, my cost a month is £400, for example. I'm getting £1,000 a month rent. The difference is £600. So usually you'd think you'd pay tax on the profit you're making on a monthly basis. If it's in your personal name, the changes now is that you get charged tax on your rent that's coming in. So it's £1,000, no matter what you're profiting, you're getting taxed £1,000. In a limited company, you get taxed still on the profit. So if you're profiting £600 a month, you get taxed on that, not the £1,000 a month you getting in rent. So that's a quick, easy way to just explain the difference. So for some people that would work, for others it may not work. Again, this is not financial advice. This is just, me relaying information that has been given to me. So obviously speak to your own personal accountants. But that is the difference. So one way to save money on tax, you still got to pay tax, and you got to pay, you'll have to pay your accountant fees as well. And there's obviously business costs that come with it. But sometimes it works out better to do it that way. It all depends on your individual circumstance. But buying through a limited company is way number 2, where you can save on tax on a monthly, yearly basis. And the last little tip, or last one I wanted to give you today, is quite new to me. It might not be new to the old school savvy investors, smart investors and stuff like that, but it's something that I recently spoke to my accountant about, and it's something that I'm going to be transitioning into 100% because this makes so much sense, especially if you're an investor who's investing for your future, for your retirement, or to build up a legacy for your children to inherit. This right here is something that you really need to look into. I can touch upon it in this video, but if you're interested and you're serious about building a portfolio to help with your retirement and also leave a legacy for your kids, this is something that you need to be speaking to your accountant about. And it is opening up a SASS fund. So a SASS pension. What does SASS stand for? And SASS stands for Small Self-Administered Scheme. Yeah, so it's a pension fund. So it's your own pension that you're building yourself. You can buy properties through this pension, yeah, which is really, really good. Being able to buy properties through your pension is very tax efficient because you don't pay any tax on your pension either. And here's why, and here's how we make it work, yeah? So if you've got a limited company set up, you can transfer all your profits from your limited company to your SASS as contributions, which lowers or kind of makes it extinct your taxable profit from your limited company because you've given it into your fund, your scheme, yeah? So that makes you a lot more tax efficient, And then with all the profits that you're getting from your limited company that are going into your SASS fund, when it's built up to a certain amount and a good amount, you can then buy property with the SASS fund. Really, really smart way, yeah? Really, really smart way. Also, with the SASS fund, if you want to pass it down and pass it on, if it's in a SASS fund, the inheritance tax is a lot less than if you're just inheriting a property or somebody's inheriting a property off you just in your personal name. If it's in your personal name, I'm pretty sure that inheritance tax is 40%. So when we're doing these things and when we're setting up our business, our property business, limited company, SASS fund, personal name if that works for you, but for what I'm talking about, we've got to be a bit more tax efficient. So limited company and setting up SASS funds make a lot of sense, especially for the longevity of what we're trying to achieve. We also got to think about who's inheriting these properties afterwards. If they're in a company or in a SASS fund, the inheritance tax is a lot less, if anything, at times, if you set it up right. But again, it's something where you need to speak to your accountant, get all the information, but that's just another really smart way to be a lot more tax efficient when buying in property. So here's the thing, guys. That's my 3 ways of being a lot more tax efficient when buying property and saving money on tax. I always look for a silver lining in everything that I'm doing because there's always a silver lining. All of the rich are buying property, yeah? And I ask myself this, if all of the rich are buying, and they continue to just keep getting richer and richer and wealthier and wealthier. Wealthy is the word, not rich, wealthy, because that's what we want. We want wealth. Why can't we? We've got to copy what they do. So when all the government are making all these changes and the landlords are just selling and getting out quick because they think they're going to be getting taxed and not making any money, what about the ones who are still making money? What are they doing? And they're buying in limited companies, they're setting up SASS funds, and they're moving their profits for the limited company into their SASS fund, which makes you can't get taxed on it. And once it builds up into that SASS fund, they buy more property. They're building long-term wealth tax-free. Yeah, there's always a silver lining in every change that comes and everything that happens. There's always a silver lining. So we've got to make sure we're in the right circle, which is my yesterday's video, around the right people, having the right conversations, having a good power team. My power team is slowly building and getting stronger and stronger. My accountant knows more about accounting than what I would ever know. Yeah, and knows more about SASS funds and buying a limited company than what I would ever know. My mortgage broker knows more about lending criteria than what I would ever know. So on and so forth. Build a really strong power team, and your circle makes your success so much easier. So really hope you've enjoyed this video. I hope it's been informative. I've been Craig Parker. Till next time.